All right, good evening, everyone, and welcome to our first webinar with Stand with Crypto Australia, where we're doing a founder series. And today we are going to be hearing from Ishan, and he's going to be taking you through RegenX. And so I'm not going to talk too much about it because he's going to explain it a lot better than I can. But before we jump into it, I just want to let you know this Australian Founder Series is going to be a four-part series. Every month, we're going to be doing a webinar with an Australian-based project that is solving a problem within an industry and how and why they're using blockchain. So I'm going to do some quick introductions and talk about some upcoming events. I'm going to hand it over to my partner in crime, Matt Hooper, who will do a little introduction to all things blockchain and Stand with Crypto, and then we'll jump into the meat and potatoes of today's session. So, quick little disclaimer before we get started. This is for educational purposes only. We're not recommending that you go out and purchase or invest in any type of projects. Really, we always recommend that you do your own research. It's very, very important. We actually have a webinar coming up later this month that is talking about tools that you can use to help you do your own research. I know of another platform that's also come out recently. It's an AI platform that's specifically for crypto research. So we'll be talking a little bit about that. And this content is always recorded. We share the recordings in our education hub, which I'll give you some information on in just a moment if you're not already in there. For those of you that don't know who I am, my name is Danielle Marie. I am the founder of Evolve Her, which is a education and mentorship platform. The education platform is open to everyone. The mentorship program is specifically designed to support women to transition either their career or kind of learn how they can get started in understanding how to invest into the crypto and Web3 ecosystem. I'm also the founder of All Things Blockchain, which we founded back in November 2020. I'm not going to tell you too much about that because Matt's going to take the lead on that. And I do a lot of other things, but I've been a crypto and blockchain educator for over the past 5 years. So as I mentioned, we have some upcoming webinars next week. We will be having a fireside chat with Nexa, which is the layer one. Then we've got our DeFi basics and ethical finance model on the 18th. And then, as I just mentioned, we've got our DYOR, do your own research in Discovery Zone and some dollar cost averaging strategies coming up on the 25th. If you scan that QR code, if you're not already subscribed to our Luma page, you will get notifications if you subscribe. We also do a lot of postings on socials and whatnot, but all of our events are listed on there. If you are not already inside the Education Hub, it's 100% free. We already have some basic courses in there for you that are on-demand learning. We share all of the recordings with of the webinar inside of the Education Hub. So if you ever miss any future ones, if you're on this call, but maybe you can't make it next week, but you really wanted to learn about that topic, you can go into the Education Hub and that's where you'll find all of the recordings. Really easy. You can just go ahead, sign up, and create an account. I'd like to take a moment to thank our Education Hub sponsors. So we've got Digital Surge, Stand with Crypto Australia, who is bringing you this founder education series, Nexa, which is a layer one blockchain, and Ethical Finance, which is a project that is basically using blockchain and a tokenized model to provide lease to own properties. So we've recently launched a WhatsApp group. We have always been a very grassroots community, in-person events only. And this year we decided, okay, you know what, it's really time to start to bring the community together also online. So as you can see, we're working on kind of building out different chapters. It is a work in progress, but we also, share updates, information on upcoming events inside the Education Hub. So, Education Hub, inside the Community Hub. So we recommend that you join that and join whatever kind of groups that are aligned with whatever region you're in or what you're interested in. I'm going to hand it over to my co-founder, Matt Hooper.
Thanks so much, Danielle, and it's a pleasure to be here tonight on the webinar. I hope you can all see me and hear me. I'm sure you can. I'm the chairperson, director, and co-founder of the couple of entities that we have for all things blockchain. I'm a technology pro. I've been falling down the rabbit hole of Web3 for about going on 6 years now. So we seem to never leave it, but we love it. And Danielle, ready for the next slide? Thank you. So we're thrilled to have a great roster of sponsors again this year. All of the community outreach that we do, well, it would be nearly impossible to do without sponsor assistance. So at the levels that we're operating now, and big shout outs tonight of all our sponsors. I'd shout out to Stand With Crypto, of course, who are behind everything we're seeing tonight, and also Mingdao Law. We've got Celine from Mingdao Law on the call tonight. That's a Brisbane-based law firm specialising in matters relating to compliance and AML/CTF, a lot of the aspects to do with running a digital asset business in Australia. So big shout out to Mingdao Law, among all the others.
Thank
Thanks,
you,
Dan.
Matt. Thank you,
You're
Dan.
welcome. You're welcome.
Okay.
Thanks, Danielle, for changing the slides. All things blockchain, we are running events all over the place. We've had events in Brisbane, Sydney, Melbourne. We've had events overseas in Southeast Asia, and we've now in our sixth year. So we're really thrilled to be growing at the rate we are. Stand with Crypto is, apart from RegenX, is what tonight's all about. I'm going to give a bit of a background on Stand with Crypto. Just before I get to that, you're very welcome, especially if you're in Brisbane, obviously, to attend our Stand with Crypto event. We are proudly the Stand with Crypto Brisbane chapter partners, bit of a mouthful, and we're really thrilled to be working with them on putting together that event. So for those of you who don't know Stand with Crypto is a global advocacy movement, and we've got a few bullet points up there on the screen about some of the aspects that they're driving towards. They were launched by Coinbase originally in 2023 out of the US to mobilize the crypto community around clear, innovation-friendly digital asset policy. Then in 2024, they launched in Australia, and that's the entity with whom we work quite closely. And also their partners, Take Three. They bring together local founders, Stand with Crypto. They bring together local founders, builders, and industry organisations to advocate for balanced regulation and to ensure that Australia remains a competitive hub for Web3 innovation. Thanks, Danielle. Recent progress. So Stand with Crypto Australia is kicking goals now. 27,000 advocates that have signed up to actually pledge to stand with crypto in Australia, and they have over 10 industry partners, of whom All Things Blockchain is proudly one. They also work with others such as Hashlock, Protocol Theory, a range of other community partners across Australia that have signed up as official community partners of Stand with Crypto. And they've run a range of events both in various cities. We ran one last year in Brisbane. They've been in Perth and I think all the major capitals. They recently had a pitch fest as well. So that's a little bit of a background. If you'd like to sign up to Stand with Crypto, you're most welcome to click on the QR code and join the movement there. And what they're doing, they're actually basically advocating for things like a bit more clarity around things like debanking, some of those other aspects that were up on the screen earlier, basically trying to get some of the right messages to Canberra to advocate on behalf of the industry. So very thankful and grateful to Stand with Crypto. Thanks, Danielle.
All right, everyone, welcome to webinar one with our Australian Founders series, where tonight we are going to hear from RegenX by Ishan. Ishan, thank you so much for joining us. And this is powered by Stand with Crypto Australia. So, Ishan, I'm going to hand it over to you.
Okay, well, thank you, Danielle and Matt, for the awesome opportunity, and thank you, Stand with Crypto, for hosting this event. I'm Ishan Dan, founder and CEO of RegenX, and we're an investment platform that helps private capital access clean energy infrastructure. So today I'll walk you through the core problem facing Australia's energy transition, why private investors can't access it. I'll explain how our solution works, how we structure projects so that they become investable, and then I'll talk about how blockchain is used to help solve this problem. So, but firstly, I want to tell you a bit about myself. My background spans 20 years plus in capital markets and private wealth. For most of my career, I helped investors allocate capital into equities, bonds, alternative investments. I've also led distribution at an Australian wealth platform, worked as an investment journalist and an investment analyst. I've also previously founded a startup called Mr. Tradie. It wasn't successful, but it's a good learning curve. So I've done sort of both sides of the fence, finance and tech. So why RegenX? During my career as a wealth manager, I witnessed a growing demand for exposure into green investments, especially amongst high net worth investors, especially clean energy. But one frustration I've experienced and kept experiencing was an inability to access these deals. So the problem here that we're solving is access. Currently, Australia, if you know, you might know, we're well behind on hitting our 2030 net zero targets because clean energy projects, simply aren't being built quick enough. Not because there's not enough capital, but because there's a lack of access to capital. Capital simply isn't reaching these projects. There are thousands of small and mid-scale solar and battery projects that are technically sound and commercially viable, but most of them struggle to reach a financial close. The reason being they're either too small for bank-led project finance or infrastructure funds. So any clean energy project that is, say, smaller than 50 million is considered too small and too risky and falls into that gap. At the same time, on the other side, there's billions of dollars in private capital that's actively looking for stable, asset-backed exposure into clean energy projects, but those investors can't access these projects because the system wasn't built for it. These deals are institutional only. They're hard to find, hard to get into. Some of them come with $1 million minimum, and once you're in, you can't get out. Also, just to clarify, in Australia, I know there's a few people on this call that may be from overseas. When I say private capital, I mean wholesale and sophisticated investors, or if you're American, accredited investors. They are individuals with high income, professional expertise. These investors can access private infrastructure deals, whereas the rest of the market is considered retail investors. We offer products to only wholesale investors. Obviously, they can deploy a lot larger amounts than your retail mum and dad investor can. So, how do we know this problem exists besides me saying I experienced it firsthand? To validate the problem, we went through over 100 interviews with wealth managers and wholesale investors. What we found was that 68% said that they struggled to access clean energy infrastructure deals. 61% cited access as the main barrier. So capital is waiting, but the system doesn't let it move efficiently. Sorry, can you hear me? Efficiently. As a result, wealth advisors either, they place clients into funds, large funds with lengthy lockups, or they avoid the sector entirely. So it really represents a lost opportunity. So our solution is simple. Build a platform that turns real clean energy projects into something investable by making it easy to enter, easy to exit, and easy to trust. So if you look at this slide, what this slide shows is that infrastructure traditionally has been large, illiquid, hard to access. So what we do is we break these assets into smaller investable units so more investors can participate at lower minimums by fractionalizing them into smaller digital units represented by tokens. These digital units represent proportional claims on future cash flows. I'll go through that a little later. So how do we turn a clean energy infrastructure asset, say a big battery, into something investable? There are three parts to making an asset investable, and this is focused on Australia only at the moment. The first is to establish a regulatory structure to hold the project, and that's done via a regulated special purpose vehicle registered as a managed investment scheme. In Australia, it's called managed investment scheme. What that does, it's a scheme where there's a segregation of duties. A responsible entity is appointed to approve instructions. An administrator maintains the off-chain investor ledger, while a custodian controls the money, the assets, the payments. A revenue participation agreement is created securing the real contracted revenue from the project based on the energy it creates and it sells. Now, the second layer is the digital layer. We issue digital syndicated energy units, bit of a mouthful, DSE we'll say for short. That represents proportional rights to the revenue participation agreement. In other words, digital syndicated energy units is just RegenX's fancy way of saying security tokens. We've just renamed them to tokens, to DSE. They're recorded on-chain as a digital registry. The blockchain doesn't hold money itself. It records ownership, automates allocation, and creates a transparent audit trail. Think of it more or less like replacing spreadsheets with programmable infrastructure. Now, the final layer is the settlement and distribution of returns. Once investor funds are received and confirmed by the custodian, capital is deployed into the clean energy asset under the regulated structure. Project revenue from the energy produced is then reconciled with verified performance data of the project, and investor returns are calculated and distributed through regulated payment rails, while blockchain anchors the ownership and audit trail. I'll explain that in a bit more detail later on, but I'll just go through how the platform works. So in an investor's perspective, the way that the platform works is, let's say after you open an account, you've done your KYC, an investor selects a project, they review the details, and then they click invest. The revenue participation agreement is signed digitally within the platform, and that stipulates like what percentage distribution yield they may return on a monthly basis. Then the custodian issues payment instructions, and the investor transfers funds. They can do that via fiat or a stablecoin. The custodian confirms funds and completes necessary compliance checks. Administrator records the allocation in the special purpose vehicle register. Then RegenX mirrors the allocation on-chain via an API. The DSE, or digital syndicated energy units or tokens, are issued to the investor's wallet. Now the investor, can see the holdings, they can track their ownership, they receive returns, they can view energy data via the dashboard. So now, I mentioned before digital syndicated energy units, which are in other words just token infrastructure units or tokens that investors purchase. There are three types of DSE units. The first type are operating DSEs, which you can see a big battery there. They're low risk, cash flow positive assets. Basically, once you set up a big battery, it generates cash straight away. Development DSEs are a bit more higher risk. They're greenfield operations, like a big solar project. They have a construction phase where there'll be no cash flow, and you might not be able to sell your tokens until that cash flow starts to come in. And the last one are hybrid DSEs, which are both. What you have to keep in mind here is that the price of each DSE unit doesn't move like a crypto token trading mechanism. It moves based on the underlying project economics, like shares. Things like energy production, revenue performance, and remaining cash flows affect its price. So price is fairly, it's intended to be fairly stable over the life of the project, while the project delivers a high yield. Say a big solar project with a battery may deliver high yield for the next 25 years, whereas the price will remain stable. That's the idea, like a bond. Now, this slide's important. The first point, in Australia, and I suspect in similar jurisdictions, we are a financial product. If someone is buying our product hoping to earn a return, it's a financial product. So RegenX operates within Australian financial structures under something called Australian Financial Services License, or AFSL, CAR arrangement, Corporate Authorised Representative. Second point, because we're pooling money and investing on behalf of a group of investors, we must also register as a managed investment scheme, which I went through before. The reason Australia does this is to protect investors, to prevent an FTX type of event where, I'm dealing in money. This prevents that. Now, this slide basically goes through the purpose of blockchain. What does it actually do for RegenX? In this case, what blockchain does is it acts as the digital registry and automation layer. It delivers three main benefits: access, transparency, and liquidity. Access, of course, is done through fractional ownership, and that solves the big problem, the access problem, the high minimum investment amounts. Infrastructure assets are divided into digital syndicated energy units, allowing wholesale investors to participate with smaller allocations, smaller minimum investment amounts. You don't need $1 million minimum investment amount as you do if you're an institutional investor. Ownership is recorded on-chain as a system of record for holdings and settlement. Number two, transparency and auditability. Ownership transfers and confirmed performance milestones are immutably recorded. Now, what does that mean? So what that means is we don't store raw battery data that comes off the battery on-chain because, that can be tampered, and how do you know it's sourced through? Instead, we integrate with an independent energy traceability platform. In this case, it's called Inosi, but there are a few others, which reconciles generation and consumption data, a cryptographic hash of the signed performance report, and the required sign-offs are anchored on-chain. That creates a tamper-resistant audit trail. That's huge for investing because greenwashing, which I've got to go through, but most of you should know, for argument's sake, when you invest in a super fund, it may say it's a green impact super fund. Then you find out 4 months later you're invested in weapons companies on the other side of the. See, you don't actually know what you're investing in when you invest in a fund, but here you can see the tamper resistant. You can see the transparent performance data, and you know what you're investing in. Number three, liquidity, improved liquidity. By using digital DSC units that are recorded on a programmable on-chain registry, it enables direct peer-to-peer transfers between wholesale investors. That reduces administrative settlement. T+2 days to settle when you're on the ASX, gone. It shortens transfer timeframes, improves secondary transfers in what would be an otherwise very illiquid market. Now, we've chosen Stellar. They're a layer one blockchain. They're an American blockchain because it was literally built for asset issuance. It provides native asset issuance, controlled issuance, and compliance-friendly primitives designed for a really regulated financial infrastructure type security. It aligns with our model of tokenized, legally structured clean energy assets over any other platform because of these properties. But essentially, we are blockchain agnostic. But that we've chosen Stellar as the main blockchain to start off with. So I put this slide in here just to give you a comparison of what it would be like if you were to try and invest in a clean energy project through a clean energy infrastructure fund. I've taken the name out though. So in this fund, it charges a $500,000 minimum investment amount. Once you've invested that $500,000 or more capital, it's locked away. And I'd say you will not be able to get your money out for at least 10 years because there's simply no buyers, there's no liquidity. Besides all the flashy marketing, you don't really know what you're investing in, and greenwashing is rampant. And unless you've got a team of analysts that are prepared to go and visit the solar project that's in the fund and then do a research report, these sorts of funds are really institutional only. Liquidity is non-existent, fees are high. Now, RegenX lowers that minimum capital requirement to $20,000. Enables structured liquidity and provides on-chain verifiable data. So what we're doing, democratizing access, we're reducing those barriers, enabling access to private capital. That really is our competitive advantage. So how do we make money? We, like a normal fund manager, we charge a capital raising fee, 3%, paid by project owners when the funding closes, covering structuring, compliance, distribution. We also charge a transaction fee on buy and sell, 1.5%. Our go-to-market strategy, I thought I'd show you this as well, because I guess it's different to other crypto-type projects that use airdrops and Discord channels. Our strategy starts from the supply side via partnerships. Because we're dealing in a real asset, we've secured MOUs with clean energy developers that have secured a consistent pipeline of ready-to-fund projects that are vetted and verified. We've got a project pipeline of $60 million worth of projects that are ready for funding. Then the second go-to-market strategy is direct outreach, reaching investors via wealth managers, independent financial advisors, professional capital networks through events, speaking spots. And finally, the last one, having worked for a leading wealth management platform, the ultimate distribution channel is to have our securities distributed via a massive wealth management platform. I've already spoken to two, and they said yes, but once we've got proper traction on the platform. So I'll quickly go through this. Last year, we validated the model. What we did was we did this through a live battery proof of concept at Little Growling Cafe with Elliott Energy. A small $3,500 battery was funded by ourselves through the platform, demonstrating end-to-end onboarding where the legal investment structure operated off-chain, and then the digital ownership records were manually entered on-chain. So our next milestone is to deploy a commercial battery project with one of our partners. The pilot will be funded entirely through the platform through a few investors, linking the regulated on-chain investment structure with the on-chain digital ownership registry connected to our responsible entity and administrator via their API. By successfully completing that pilot, it establishes a repeatable model that we can use to fund, our growing pipeline of clean energy projects, and it'll just go from there. So this is the team, a combination of three worlds: capital markets, sustainability, and blockchain expertise. We're also supported by an advisor that has considerable startup experience. And we've got one full stack developer. We'd love to have more, but until we raise proper capital, that's the team at the moment. Now, I know this isn't a pitch, but I mentioned we're raising capital at the moment as well. Not a lot, only 250,000. And that's just to transition from proof of concept into our pilot project to get our pilot project complete. So to wrap it up, I'm going to end this just on a few thoughts. Over the last years, we started this towards the end of August 2023, just after the FTX collapse, I think, around there. A lot of the crypto capital that we've seen has been circulating inside the same ecosystem. There's been very little new capital that has entered the system. Meanwhile, I see institutions and private capital in Australia alone that are sitting on trillions of dollars of capital that are just sitting on the sidelines waiting to be deployed. The thing about private capital is the importance of risk and volatility and protecting capital while earning a return. It's fundamental to their investment strategy. That's exactly what we bring to the table. We're providing access to institutional grade clean energy infrastructure assets that are uncorrelated to equity markets, uncorrelated to bond markets, stable, transparent, and generate a consistent double-digit yield while also helping Australia with its energy transition. So I think this is a really big opportunity to replace fossil fuel wealth, and I see that happening with the new coming clean energy wealth. And what better way to do it than on-chain? So thank you for all your support, and thank you for having me here. Are there any questions?
Thank you so much. That was a great overview. Yes, we've got one so far, and if anybody else has any questions, pop them in there. I definitely have a few, but we'll start with D's. Are the DSE returns calculated per project or across RegenX as a whole?
No, they're calculated per project. So the way it works is every project has a separate DSE token or unit, and that the value or price of that token is calculated when the project is structured, when the tokens are released, and the idea is that the price will stay relatively stable, but it's more like a yield bearing. Um, Security. On the off-chain side, it'll be one special purpose vehicle that houses all the projects, but our administrator is able to use, they're called subunits of, so they're subunits that represent each project. So they're able to categorize subunits. So I might eventually have three special purpose vehicles, but for the moment, it'll just be one with all the projects.
All right, and I know I had this question for you when we had our pre-call to understand because there's the off-chain data, and then you take that data that's off-chain and you kind of put it on-chain. But how are you making sure that the data that is being putting once it's on-chain, it's immutable and transparent. But how are we making sure that the data that's being actually put on-chain is true and accurate and hasn't been tampered with before it goes onto the blockchain?
Yeah. So yeah, I definitely made sure I got that one under us. Now, so what happens is each say for argument's sake a big battery project, each big battery project has a dashboard management system, and they have their own metrics, digital metrics and data that comes off each project. Each project has a sort of a system. Now that data we don't store or we don't touch on chain. What happens is there will be, it's the name is Enosoi. They're a data aggregator, and what they do is they come in and they're the ones that receive that data. They vet and verify, and now what I said before is they vet and verify that data, and then that data then comes to us after it's been after it goes through that whole process, and that's when the audit trail starts, if that makes sense.
Yep, definitely. We've got another question here. How do you evaluate a project, example, best project, and decide the price of each unit?
Yeah, so it ideally, it doesn't really matter what the price of the project is, because if it's $1 and that stays stable and the yield, so ideally it doesn't really matter. But obviously it will be done through a valuation. We've got independent valuers that we're working with. They will write a report on the actual project mechanics, and they will give us a valuation. And then depending on how much money they need or how much capital they need and how many tokens they're raising, that gives us a price of the token. Now, that price of the token may be $100, it may be 1,000, maybe $1. I think it's irrelevant because whether it's $1 or 10, it's may start at that, but it may stay the same the entire way. The only time that you may see a token price move with volatility is if the actual project goes into some catastrophic failure and it turns off. Then the price of then obviously the cash flows are affected and the price of the tokens affected. Then you will see some movement, but otherwise it should remain relatively stable throughout the life, 25 years of the, well, however long it is of the project. Yeah.
Next question is how are yields distributed to investors?
Yeah. So obviously the money's because of the managed investment scheme regulations, it prevents us from dealing with or touching or money ourselves. What happens is the automated, we have the the on-chain automation system sends messages to the responsible entity and to the administrator, and then based on the revenue participation agreement, based on what, say for argument's sake, if I've got a 5% holding in a battery project, then according to my percentage holding, and based on the revenue participation agreement, that whatever cash flow is generated that month is paid to me. The actual process is done through the off-chain system, and then the on-chain system matches up with the off-chain system to show that that dividend was paid or that yield was paid, if that makes sense.
And how this, I'm just piggybacking off of this question. We'll move on to the next one in just a moment. But how often are those yields paid? And then I'm assuming that they're paid in fiat, or are you paying out it because you said they're done off chain, or
Correct.
people get paid in stable coins?
We can do both actually through Stellar. Stellar has there's an on-ramp or off-ramp system that we're in talks with Stellar. Stellar can work with our custody provider, and they can do an off and on-ramp system where they can provide it. They can pay via stablecoin or by fiat. And depending on what the asset is, if it's a battery project, a lot of the battery projects do monthly payments, and that's not out of that's some of the solar power projects it may be quarterly, but in most chances the battery projects we're working at the moment it's monthly.
Effie says, let's get AUDD stablecoin native on Stellar. Um, next question. For operating project, is the whole project, example, 100% revenue stake sold in units? If yes, how do you make sure the operating team will try to maximize profits?
Yeah, so that's an interesting question. So so there's a couple of ways. The first way is according to the revenue participation agreement. Let's say, for argument's sake, the actual project owner, it'll be agreed with the project owner that an amount, say for argument's sake, a 10% yield of whatever cash flow is generated that month always goes back to the investors. Now, also we have a arbitrage. There'll be there'll be the operator as well, and the operator also generates profit from arbitraging energy prices, grid stabilization, and there's a few other ways as well that they generate a profit that's added on top of the yield, right? But of course, this is where things can change a bit. There are months where prices may go negative. And when that happens, no cash flow for that entire month, let's just say, is generated. Then that's fine. That if that's the case, then that month there's no yield return to the investor, and then that just pushes it out. So that's how it is. But we try to, through the revenue participation agreement, we try to secure a minimum, pay. It's like a payback type of yield. So we aim for something between the 8 to 12 to 13%, and whatever is generated by the energy arbitrager is put on top.
All right. Next question. Not sure if I got it clearly on what is off-chain and off-chain, but what happens if you lose your wallet on Stellar Chain? Then do you
No,
lose?
you don't. That's the beauty. The beauty is even if you lose your wallet or your wallet gets hacked or whatever it is, that is just a digital representation. There are two ledgers. One is the off-chain ledger, one is the on-chain ledger. The off-chain ledger is the legally enforceable ledger. So if the off-chain ledger says that you don't have it, then you don't have it. But if the on-chain ledger gets hacked or something, the off-chain ledger is so the on-chain ledger sends the instructions, but the off-chain ledger is the one that reflects the real value. That prevents fraud. It prevents scams. It prevents what happened with FTX, or if we wanted to transfer things out, it can't be done.
And for those of you that are new on the call, if you haven't heard of FTX, go and do some research. It was a big industry learning. We've got a couple more questions. If anybody else has any burning questions, please make sure you pop them in there before we wrap it up. We've got another one here. During the life of the project, can the number of tokens or the units increase? If yes, will the profit revenue be diluted?
Number of tokens, can they increase? Unless the project is looking to raise more capital, I wouldn't think so. It's fixed. That's how many tokens are issued, and then that just trades in secondary market between each other. Um, yeah, there would be no reason to increase the token value because there wouldn't be unless the developer is looking to do another raising, and then that would be a separate token. Yeah, so no.
No. Okay. I love it sometimes when I answer a question, I work through it and then I answer it myself.
Yeah.
Well, I have one more question, just and if anybody else has a last question, make sure that you pop it in there. Um, you mentioned how that the milestones can be, programmed within the smart contract to release funds to different projects when they reach that milestone. How is it determined if they've reached those milestones? And then how are the funds, issued? Do you use multi-sigs? Is it done off-chain? Is it done on-chain? Who decides that that milestone has been achieved and that the next round of funds are going to be delivered to the project?
Yeah. So going back to how the data comes onto our platform, what I was saying before is we don't store battery data on chain. What we do is we integrate with an independent energy traceability platform, and they're the ones that receive that data. What they do is they reconcile the generation and of data and the consumption of data, and they reconcile that it is correct. They also pass this information. Then what happens is a cryptographic hash there's a performance report that's released, and that's signed off, and they're called the required sign-offs are then anchored on chain, and that's when you can see whether a milestone is reached or not. And once that milestone, if there's a milestone, say for argument's sake, if 400 kilowatts of energy has to be generated before a yield payment is paid, once that is received then and it's signed off, then what happens is an instruction is sent by the RE to make a payment out to all of the investors. The off-chain side updates, the on-chain side updates as well, and that creates the resistant audit trail.
Thank you for that explanation. We've got one more question. What is the estimated annual yield rate on my investment? And I'm going to back up that question with if you have multiple different projects, do you have like a marketplace that people can go on and look at the different, like I'm going to assume different projects are providing different yield, or is it just, yeah, how does that work?
Can I get someone to help me with this question just because he's one of our partners?
Of
Ben, if you're
course.
there, can you give me a good example of a yield on one of your solar projects if you can, if you're allowed to? Is he there? Ben?
Maybe he's
Maybe he's not.
he's not there.
I I think he's there. Hold on. Yep, he's there. I can't hear you. Mute. Oh, I think he's still on mute. You're on mute. There you go.
Sorry, 12% is about a
12%. There you go.
base rate. So we look for, anything up to 18, but we look for 12% as a base rate.
Okay, and does that like vary from project to project? Do you guys have multiple different projects? And I could go in and look to see what projects are offering kind of what yield?
They do vary marginally, yes.
Hmm.
Yeah.
Okay, perfect. Thank you so much.
And they do, and obviously vary month to month, year to year.
Yeah, yeah, definitely. It always varies. Well, thank you so much. This is your last opportunity to pop in one last question, but I don't know about everybody else that tuned in on the call. I definitely learned a lot. This is definitely not my area of expertise, so we're very excited to be able to bring on some of these founders that are building these amazing projects right here in Australia and powered by Stand with Crypto Australia. So thank you so much, everyone, for joining us tonight. As a friendly reminder, we do webinar Wednesdays every single Wednesday. If you can't join us and there's a topic that you wanted to learn on, the recordings will be in the Education Hub. So, Ishan Dan, thank you so much. Ben, thank you for jumping in there at the
Thanks,
end.
Ben.
And I hope that everybody enjoyed tonight's call. Thank you so much.